Hi again, this is Rick with AmazingAccuracy.com, and today is August 31st, 2019. It's currently 4:51 p.m. It's a Saturday evening, and the trading week ended yesterday, of course, week ending August 30th. So, as I'm about to go and produce this week's F-date report, I thought I'd go ahead and talk about a few markets. But in this video, I'm going to talk about one market in particular, and that is the Australian dollar. Now, as you're probably aware, the Australian dollar has been taking quite a hit ever since January of 2018. It has been pretty much nothing but down, down, down in relation to the US dollar. And I'm not going to say that that is actually coming to an end right now, but I am going to say that we are looking for a rally at this time. And I'm going to explain why I believe this to be the case. If you take a look right here, you see that we have these red diamonds. Well, this red diamond here represents a time period where we should see a reversal in price direction. This is called a weekly F date. Because if you look up here, you can see we're looking at the weekly chart, and these diamonds represent an F date on our weekly F date report. So when we have a price bar that either has a new lower low or a new higher high, and it's within one bar of one of these F dates, we want to start paying close attention to the market, because it is highly likely that the market is going to make a change in direction. And that's what these F dates are so effective in helping us do at a very high rate of accuracy. So as you can see here, last week, that is week ending August 30th, it ended by making a lower price bar. The low is lower than the previous low. Even the high is lower than the previous high. Now, this price bar has the potential to be a bottom because it is a new lower low. And because it is within one bar of this diamond, we start looking at it as a possible swing bottom. Now, if you don't know what a swing bottom or a swing top is, I suggest taking a look at some of my articles at AmazingAccuracy.com, and I will soon be producing another video that will just clarify for some exactly what a swing bottom and swing top is, so that I don't have to touch on that at every video that I put out. I'll just direct my viewers to review what a swing bottom or swing top is. So in this case here, though, we're looking at the potential for this low that was produced last week to become a swing bottom, meaning that we're going to be looking for prices to start rising in the Australian dollar. Now, this is the weekly picture. What I like to do is, once I've looked at the weekly picture, then I want to take a look at the daily picture to see if there is possibly an opportunity to take advantage of this expectation for the purposes of trading it. So I'm going to go now down to the daily time frame. I'm going to click on the D here on the provisions charting software. And we're going to take a look now at these daily price bars. And if you'll notice here, we have this new lower low. You can see it's the very last price bar that was formed yesterday. That was Friday, August 30th. And you can also see that it is one day after the daily F date. This is this diamond right here. Well, clearly, no swing occurred a day before. No swing occurred on. So the only possibility for a swing to occur within this F date would have to be Friday's price bar, which means it's either going to happen, or this forecast here from this red diamond becomes busted. In other words, it becomes a failure. So the next thing we want to see here is, not only is this a potential swing bottom because it is within one bar of this F date, but it also has the potential of being a higher swing bottom. And what do I mean by that? Well, the previous bottom is right here. and before that we had here, and then way back here. This low that you see right here happened last Monday, and that represents the low of the whole week, which is this low right here. So what we have here is a high probability that this price bar right here is likely to be a swing bottom, which is higher than the bottom of the week itself, making it a potential higher swing bottom. This is what we call a buy setup formation. It's an opportunity to buy. Now, the way we would normally buy something like this at low risk is to simply put a buy stop a tick above the high of this price bar. So if prices go up and hit it and we end up going long the market, we at the same time have just confirmed this as a swing bottom, because it requires prices to go above the high in order for this bar to confirm as a swing bottom. So we're actually allowing the market to tell us whether our expectation was correct or not first before we enter. Now, of course, day traders, being as bold as we are, we may go down to our minute chart and we may end up buying sometime within this range here without waiting for it to go higher, because we could play off of the intraday swing bottoms and swing tops. But for the standard way of looking at taking advantage of daily updates is just we simply buy long if it confirms our expectation. And then of course our stop loss would be below that low, because we would expect that low to hold, because the whole forecast is that we end up with a swing bottom, and we would not have a swing bottom if prices the next day were to actually go lower than this low. That would be a bust. I hope that makes sense. If not, email me or leave a comment down below and I'll try to elaborate. Okay, on the monthly, I notice here on the monthly chart of the Australian dollar that the month of August, the low has hit a long-term square support. You can see this declining line right here, and it has hit that and has held. Not only that, but it is in long-term oversold territory. That is this red area here, saying that the probability is very high for the Australian dollar to likely be bullish in the near term. Now, what I would also like to do is show you a tool, a very, very valuable tool that is found in our Provisions charting software. It's called a seasonal data report. And you can see here that it is referring to the month of August here of this year, that it would have been a down month and then preceded, or not preceded, but followed by two bullish months. The month of September and October being historically bullish for the Australian dollar. So this also supports our expectation for a bullish Australian dollar going into the month of September. And the daily, or the weekly I should say, if we go down to the weekly chart here, you'll notice that the week of August 30th is normally a bearish week, which obviously it was here. And then the next 2 weeks has been historically bullish in the Australian dollar. And that would be this coming week and the week after. So I would be in expectation of at least a 2-week bullish run before it starts to correct in the second half of September and then go back into a bullish overall pattern, if that's what it intends on doing. And this is all based on seasonal cycles here, whereas the F dates are based on mathematical, in other words, geomathematics, as well as what do you call cycle analysis. So going to the daily here, we can see that 8:30, which was Friday, is right here. Now it says that Monday could possibly be a bearish day, but we may not have anything really happening there because it's a holiday here in the US. And then notice for the rest of the week that even on the daily, it's historically quite bullish. That's what the blue here is. So it looks like next week would be an overall bullish week to get everything started. Let me get that out of the way. So we looked at the monthly, we looked at the weekly, we looked at the daily, we looked at the F dates for the weekly and the daily. We can see that all time frames has the low in oversold territory. That's the red zone. Here's the weekly. You can see here in the short term oversold zone. And we've already seen the monthly long term oversold zone. So the outlook for the Australian dollar looks very strong to be a more bullish play than bearish for the next few weeks to come. And that is the forecast for the Australian dollar for this video. If you haven't done so already, I highly recommend you subscribe to my channel so that you will be informed of my upcoming videos, especially if you click the notification bell next to subscribe button so that it will give you an indication that one of my videos have been uploaded, because they are quite timely, and it's better to catch them before the action happens rather than later. Later becomes an educational video, before becomes a potential money maker. All right, thank you, and I'll see you in the next video.